Hi, I'm Pat Keown, a research analyst with Thomson Reuters Lipper, and I'm here to speak to you about fund flows activity for the week ended Wednesday, August 3rd. Let's start by taking a quick week at that week's equity market activity. The S&P 500 index was down for the second consecutive week. It retreated 0.1% after losing 0.6% the week before. Last week, the equity markets were kind of held back by some disappointing economic news, as well as continuing slump in oil prices. A preliminary look at second quarter GDP shows the U.S. economy growing at a rate of 1.2%, which is far less than the forecasted 2.6%. And oil prices have continued to slump since they hit their recent high of 51.23 per barrel in June. Midweek, they actually dipped below $40 per barrel, over a 20% decrease since the recent high. Or they rallied somewhat on the last trading day of the week to close the week at 41.07. Let's turn our attention back now to the fund flows activity. Let's start by taking a look at our fund macro groups. Equity mutual funds saw $4.4 billion leave for the week. Taxable bond funds took in $2.1 billion in net new money. Muni bond funds had net inflows of just over $700 million, and money market funds took in $3.8 billion in net new money. Let's move on now, take a closer look at the equity mutual fund group. The $4.4 billion in net outflows represented the 21st straight week of outflows for the group, during which time they've seen $82 billion leave, and puts their year-to-date net outflows at just over $104 billion. This is the worst run for equity mutual funds since the global financial crisis, when they had net outflows in 29 of the last 30 weeks in 2008. During this time period, they saw just over $100 billion leave their coffers. The hardest hit this year have been diversified equity funds. The largest outflow belongs to the multi-cap growth fund group. They've had $33.5 billion leave, followed closely by large cap core funds, international large cap growth funds, and large cap growth funds, which have all had net outflows between $25 and $30 billion. Moving on now, let's take a look at our equity ETF group. The group took in just over $750 million in net new money last week. This is the fifth straight week of inflows for the group. The largest inflow for the week belonged to PowerShares QQQ at approximately $1.1 billion. And Spider Gold also had took in a significant amount of net new money, just short of $700 million at $687 million. On the sell side, we see the Spider S&P 500 with net outflows of approximately $900 million. Moving on now, let's take a look at our taxable bond groups. We'll start with mutual funds. Taxable bond mutual funds took in $2.1 billion in net new money last week. It was the fourth straight week of inflows for the group. The largest inflows belong to core plus bond funds and the core bond fund groups, which had net inflows of $1.6 billion and approximately $670 million respectively. Moving on now to taxable bond ETFs. The group had net outflows last week, roughly $2.2 billion. This broke a streak of six consecutive weeks of net inflows. The largest outflows this week came from the high yield ETF products. We see the iShares iBox high yield product had $1.5 billion leave, followed by the Spider Barclay high yield had about $700 million leave. On the buy side, we see iShares JPM USD emerging market bond product took in about $300 million in net new money. Moving on now to our muni bond fund group. The streak continues for muni bond funds, 44 straight weeks of inflows for the group. This week, as stated previously, just over $700 million in net inflows, with the largest contributors being high yield muni funds and general insured muni funds, which had net inflows of roughly $210 million and $140 million respectively. Moving on to our last group now, let's take a look at money market funds. Net inflows last week for the group, about $3.8 billion, reduced their year-to-date net outflow to just over $62 billion. Largest contributor last week net inflows, U.S. government money market funds took in $20.8 billion, and the largest outflow belonged to the U.S. Treasury money market funds, which saw about $12.6 billion leave. Well, that wraps up this week's report. If If you'd like to take a closer look at the data yourself, please join us at our website, www.lipperusfundflows.com. And please join us here again next week, where another one of our research analysts will be talking to you about that week's fund flows activity.